welcome to my spaces. I'm hoping to give you a different perspective. My name is Vijay. I have battled for more than 3 decades in the stock market. That's why I kept my pseudonym as Cynic. I've been beaten and humiliated so many times I can't remember. But thank God I'm not completely knocked out. So, is the bull really dead? So I will broadly look at four topics very quickly. I will go through. I would like to answer questions later. Fundamentals. Sorry, the first one is liquidity. The second one is fundamentals. The third is macros, and the fourth is sentiment. If you take liquidity, local liquidity is still plenty. Every single day, DIs are buying, trying to match FIs many times, but they are still net buyers. SIP numbers are consistent. Mutual fund inflows for the new mutual funds and NFO offers are good enough. And the AIFs and the small cases are progressing well. So as far as local liquidity is concerned, there is plenty. But India-specific global flows are dwindling. That is what we observe. That amazing kind of volumes have gone out. If you really look at global liquidity, I was just observing. Everybody looks at Fed. Fed is, of course, they've stopped QE completely. But there are three other central bankers: ECB, BOJ, and China, who are still having the easy money policy. If you actually look at that, their balance sheets are the combined balance sheets are bigger than that of Fed. So Fed alone is out of the equation of easy money. So the QEs of the other three central bankers are going on. So it is not that global liquidity has collapsed. It is not true. Now we always hear this thing about don't fight the Fed. And what is that? Fighting the Fed is when Fed eases this one, whatever may be the fundamentals, the market will go up because the easy money is coming from Fed. Last year, I've been mentioning that, when you say don't fight the Fed, it works both ways. When the Fed is easing, you have to buy. When the Fed is tightening, you have to sell. At least don't buy. But of course, at that point of time, nobody listened to me. That's a different matter altogether. But the fighting the Fed has resulted in huge losses on the NASDAQ. The NASDAQ is one of the most affected exchange today in terms of the drop in values. You see, NASDAQ is the second largest exchange in the world. It's a $21 trillion market capitalization exchange. If you compare that with NSE, NSE is a $3 trillion market capitalization. So it is 7 times as large as NSE in terms of market capitalization. Now, recently, NASDAQ hit a low of about 32%. 32%. When I made a prediction that Indian markets may go down between 20 and 30%, 20 and 30%, I was trolled incessantly. That's a different matter. But what I'm trying to get at is nobody has observed or nobody has pointed out that NASDAQ is down 32%, which is one of the highest. The last time NASDAQ moved with such acceleration was in the 2000 dot-com crash. But that was linked to NASDAQ. So one can justify that. But you see, without any major scam or bubble, you can say, NASDAQ has come down by 32%. In the 2000 dot-com, it lost 43% in 2000. In the entire year of 2000, it lost 43%. Whereas here, it has lost within a few months. Of course, NASDAQ lost finally about 80% over the 2 years. But I'm saying the initial fall, it took them a year to get to 43. Here, within a few months, it has gone to 32% in just 7 months, actually. So here we are saying Indian markets have lost about 15%. And CNXIT, which was the most popular index and what people used to say, where shall we hide? We'll hide in tech stocks. I've written extensively on that. People who come onto my Twitter timeline will know. In fact, I made a prediction that this year, 2022, will be bad for the markets. And the market will bottom out only when CNXIT bottoms out. So that time, the CNXIT was about
Abhishek, are you there?
हाँ हाँ हो
I think sir got disconnected. I think he'll have to stop
हाँ
and come
चल
back.
2 मिनट रुक जाएंगे आ जाएंगे. मेरे को लगा कि मेरा क्रैश हो गया.
Out or they throw me out, but this Twitter seems to be throwing me out. You can hear me, Abhishek?
Yeah.
Okay. So CNX IT has lost 28.5%, less than 5 months, which is the fastest fall without any news. So this is the kind of impact liquidity or lack of liquidity has happened, because this is a concentrated selling by FIIs in these large cap stocks, especially tech stocks, which has resulted in a tech index falling. Actually, tech index is the biggest loser among the sectoral indices. So now let me go to fundamentals. You see, we all know inflation has been raging. Last year, people didn't talk of inflation, or they talked of it as only transitory. Today, it has become permanent. The Indian corporate fundamentals, as we see today, have not been really affected. But so were they not in 2008. 2008 also, Indian corporate fundamentals were chugging along fine through the year. They started deteriorating in the last 3 months of the year. And then it continued in 2009 and further. So as of now, we don't really have too much of a problem in terms of the corporate results, excepting that the margin, there is a margin problem, but then the market knew that there will be a margin problem because of inflation and supply bottlenecks. So that is as far as corporate fundamentals are concerned. But we know that fundamentals, the market is supposed to discount. More important is the liquidity issue. Then let me run to macro. So on fundamentals, we are okay. On liquidity, we are not okay as far as foreigners are concerned, but Indian liquidity, we are still okay. The local guys are not panicked. There have been no redemptions as of now, excepting in case of Axis Bank, but that was a fund-based, specific fund-related issue. So on macros, the biggest problem in macros is inflation. But inflation is a known devil. We have seen inflation rising the last 6 months, and it has only increased. And so it is not something which, it is new. Even RBI, who was vacillating as to whether to raise interest rates, have panicked and they have raised interest rates. So everybody on the street now knows that inflation has hurt them. Even the economists now know. Economists are the last guys to know about inflation. And economists sitting in RBI are the lastest, if you may call that. So while we face inflationary pressures every single day, those guys live in a completely different universe, parallel universe. So they have also realized that there is something called inflation and it's going to hurt, and therefore they have started panicking. Now then, the other macro is the Ukraine situation. This is also a known devil. That happened on February 24th, leading up to that from some February 1st week. There was some tension. By February 24th, the invasion happened. So we're already more than 3 months into the invasion. So it's not something new. There's nothing new coming from the battlefield, except we know that the battle is on. So much so some people have forgotten that it is on. Nobody is talking of Ukraine anymore. Then the third thing which is troubling us is the commodity boom, specifically oil. And that has affected, the margins, prices, and even projections. So that is as far as the commodities are concerned, and specifically for India, it is oil. In the early part of the year, when oil was around $70, I had put in a report of a foreign brokerage house on my timeline, where it said out of the 30 commodities which that gentleman follows, 20 commodities were in backwardation. Backwardation basically means that the shorters are thinking that the next month will be lower price. Say today Nifty is in backwardation. The June futures are, I think, at a discount to the May futures. So that is backwardation. Basically, they expect that the things will come down. The prices will come down the following months. So when that study came through, it looked like oil was one of those where the shorts were maximum. The call options were written at 75, 80, every $5 up to $125. And we know something called a gamma squeeze happens when there is mismatch. One was expecting a gamma squeeze, which I wrote about, that oil can go up to $125. I assumed when it was 75 that it could go there purely because of the gamma squeeze. Of course, at that point of time, I didn't know about the Ukraine issue. No, none of us knew, but somebody in the market knew. So that's why they took this long questions. So that happened. And once it has gone to 125, of course, it never stops at where it has to go. It always, the pendulum always swings much more. So it went up to 135, and then it has cooled off. Now, if you look at the data, you'll be surprised that everybody is sitting on oil longs. Everybody believes that oil will go to new highs. So now you've got an exactly opposite situation of what was there when oil was $75, $80. Now, so it will be very interesting to see whether actually oil will hit new highs of 200, 500. Somebody's talking of $1,000. That we will debate and talk about it in the question answer session. But right now, the situation is that people are long oil. Now, in terms of sentiment, hence positioning, last year when I argued that you will have stagflation and high inflation, my cry fell on deaf ears. Of course, I'm just an ordinary guy. What would I know when Fed says inflation is transitory? But now you see, everybody talks about inflation and stagflation today. So it is not news anymore, or it's not a mystery. Everybody knows there is something called inflation, stagflation, global stagflation. Everybody looking at what is happening in the US, UK, France, Australia, China. Now everybody is comparing notes on whose inflation is higher than Indian inflation. So that is what it is today. So the final thing on the sentiment, which I found very interesting, and which I presented it as a series of tweets in my recent thread, was the Global Fund Manager Survey, which the Bank of America does every month. So the May 22nd survey threw up some very interesting things, especially related to equity. Now, this survey is really very widespread. There are about 330 panelists. They collectively manage close to $1 trillion. And as I mentioned, in our Indian stock market, NSE market capitalization $3 trillion. So they are managing 1/3 of NSE's market cap. So it's huge, and it is what I would say give you a fairly good idea of how people have been positioned. So a few things from that survey. They have now got the highest cash level since 9/11. 9/11 is when the global thing panicked in 2001 because of that the World Trade Center fell down. So there was a feeling that the world is going to end. In fact, New York Stock Exchange was closed for 4 days. So if you take cash levels, they are equal to 9/11 cash levels. In India, people are fully invested because they don't want to be in cash because for whatever reasons, I think the mutual fund managers just want to be invested in stocks. Then the most crowded trade, if you go through that, is oil, the most crowded trade. And the maximum segment among equities which is shorted is tech. Tech has been shorted the maximum since August 2006. That is the kind of short positions which are there. And if they were asked which is the instrument which will outperform in this year, 60% of them said oil will outperform, and only 10% said S&P 500. EM equities, where we are, emerging market equities, there is hardly anybody who was willing to bet on EM equities. So that is what it is. So today the sentiment is very poor. There is fear everywhere, and everyone knows about Ukraine, inflation, and oil, and global problems. So it is not anymore a secret in the sense, it's an open secret. Everybody knows. So when we go into our markets, this information is known to everybody. So we believe always that market discounts these news. So we are at this juncture now, where two of my very close friends and who are very good analysts by themselves. One of them is here. We will go and get a new high of 21,000. There's another friend of mine who is also much more experienced than I am, has seen many more markets, and whom I respect. He expects the market to go to 12,000. So they both are talking the same number, but slightly ulta. One is 12 and one is 21. So now you have if you talk to either of them, I'm sure they will give you very convincing reasons as to why it should go to 21 or why it should go to 12. So where am I? I will mention it to you at the end. What I noticed today and why I thought I should do a spaces very quickly is so many things have changed. And some of these are what you would say, they are in front of our eyes, but we are not, talking about it. For instance, the 10-year yield. Everybody looking at 10-year yield to see what is happening, whether it will reach 4. It went up from 1.64 to 3.21 within a few months. From this is US 10-year yield. It went up to 3.21. Today it has broken 2.82. It is now 2.77. People were expecting it will go to 4. It is now reversed. And this reversal, the last time it was below 2.8 was on April 11th. So something has happened. That is, the yields are coming down. Now, if you can argue saying that if yields are coming down, so and today you saw the palm oil ban lifted by Indonesia, and if you look at the currency market also, the currency has stabilized. The euro dollar, which had gone below 105, 104 is supposed to be a very strong support. It fell below that for a brief while 2-3 days ago. Now it has come back to 1.05. Basically, the dollar, which was supposed to be very strong at a 104 and all, now I think it has come down to some 103. So therefore, you see, so many things have changed, which people are not noticing because we have got caught in the bearish sentiment that we feel that, market cannot go up at all. So in that connection, what I am saying is, if you look at the final things I would like to say is, in terms of, you see this, how a divergence has played out in terms of the sectors. See, we normally talk of positive divergence and the negative divergence as far as the technical indicators are concerned. But if you really look at a different kind of divergence, say last time when Nifty hit this number, which were the sectors which were participating on the downside and what were participating on the upside and what were participating with the market. So in fact, in March, most of the sectors got hit when we hit about 15,600 and odd in March. This time, you'll be surprised to know that auto is doing far better. It has gone nowhere near the March lows. FMCG is far higher than FMCG index, is far higher than what it was in March. Energy, infra, commodities, they're all much, much higher. What has come down significantly is healthcare, banking, and your pharma. So these indices and tech, of course, is the worst hit. So you are able to see which are supposed to be interest rate sensitive. We said auto is an interest rate sensitive sector. If interest rates are going up, then auto sector should be coming down. But on the other hand, it has not come anywhere near the bottom. Then we said people will downsize in FMCG. They will go to lower level brands, value brands. But you see lever, of course, ITC, they are all much higher than what they were at that point of time. So the entire FMCG sector itself is doing much better. So and what about infra? Infra also supposed to be affected by interest rates. So what we think are interest rate sensitive sectors, they are doing far better in a higher interest rate environment. So which means people who are buying that may be thinking, or they may be fairly certain that the interest rates will not go up beyond what we are thinking. Today we are thinking Fed will do 7-8 times. Indian interest rates will go up 3 times or 4 times, whatever number people are talking, all kinds of numbers they're talking. But the prices are not showing me that. That is what I thought was very interesting. So therefore, my point is, what we think and what we see are completely different things. Unless we want to think whatever we think is right and disregard the prices. We keep on saying Bhavi Bhagwan hai. If Bhav is Bhagwan, then look at the prices. The prices are telling you completely a different thing, at least as far as I am concerned. And I think, as I said, macros are changing. Now, whether this is a temporary change or what, only time will tell. But at this point of time, I will be very careful in taking a negative view on the market. Now, it can just happen that the market may go on for doing an intermediate rally, which as we have seen three times, we have seen intermediate rallies which have gone up to 18,100, right from 16,400, it has gone up to 18,350. From 15,800, it has crossed 18,100. We have seen these kind of rallies, which are fierce, fast, furious, and very short span of time. We may yet see another one like that. This time, more than ever. Incidentally, the bullish bearish numbers, these numbers are apparently the similar numbers as they were seen in February of 2009. February of 2009, where everything was gloom and doom. The markets were doing nothing. Finally, they made a significant bottom in March. Globally, US especially, India, we almost did a double bottom. But after that, it just took off. And, nothing in the fundamentals was good at that point of time. Nothing in the fundamentals. In fact, when I went to Singapore on Orchard Road, there was hardly anybody in Orchard Road. In 2009, April I had gone. People were struggling. Things were available at discounts. Everybody was feeling that the world is ending. I'm talking of April 2009. By the time Nifty had gone up to 3,500. 2,250 was the low in October. 2,450, 2,500 was low in March. 1 month later, I was there in Singapore and there was gloom and doom. So if you look at that, we would have thought, okay, recession is there upon us. Many banks were still failing in the entire 2009. But 2009 was one of the best years to be in equities. So sometimes the prices move ahead of fundamentals. The fundamentals will follow. Not sometimes. It's in fact more often than not. So my thinking is, right now, nobody can make a bullish case. Nobody can make a bullish case, really speaking. But if you see the prices, you can certainly make a bullish case. You can certainly make a bullish case, is my conviction, because the prices are telling me that. Now, whatever may be my argument, can't you see people are struggling? Can't you see RBI is going to increase rate? Can't you see Fed is going to increase rates? Can't you see the Russian problem is still on? Yes, these are all known devils. Now, a new devil has to come, which is unknown to us today, for us to expect that the markets will significantly go lower from here. So I made, my thinking is like this. I'm a defensive guy. So what is my risk here? My risk in terms of pure Nifty is, say, about 250 points. Say 15,671 or something was the low. We are sitting at 15,800. So I'm saying 200 points you take, 250 points, say 15,550. You put as a stop, that as a stop loss as a trader, and then look at the positive end, because the market prices are telling you something else. I don't want to fight the prices. And the investment thesis, you give another 100 points, say 15,500 and below if it starts trading for an extended period of time, then you can look at those very significantly lower numbers. Right now, even though I was bearish for 8 months, I have completely removed all my bearish bets last week. Last Friday, I have completely removed all my bearish bets. And I, simply because these numbers told me, no, the risk reward is very, very much is not in favor of a person who's negative. He may make money. Today they would have made. Yesterday, if you sold at 16,400, you would have made about 800 points, 600 points. Yes, that will happen. That happened in March of 2009. I'm not saying that we will start a multi-year bull run, but even at the fag end of the bear market or a bearish intermediate, before an intermediate rally starts, you will make money by shorting, because this is a bear market, which I've been shouting from the rooftops for last 8 months. But today, I am unwilling to accept I'm not willing to take a chance on going on the other side. This is the data I presented, sentiment data, macro data I have presented, and also the hidden divergences which I showed in terms of the sectors. Plus, I'm seeing that something is coming, something is happening below the radar, which is on the Ukraine war, and plus the Indonesian thing which happened today. So those are things which make me, optimistic rather than pessimistic at these levels. So let me stop here, and I would request Vinay to take over, and we can have these question answers. I tried to put a hard stop at 11:30. So let's complete it by that time, and I'll try to answer any questions which are directed to me or to anybody else who comes on the panel. and we can have a discussion, which we can try to see what things I have missed, what other things which can happen, and then let's take it forward. This is my view. I thought I should share. Thank you for listening. Vinay, over to you. Between Vinay and Abhishek, you handle it right now. Vinay, you can take over, and then Abhishek also can chip in whenever. I'll just take a back seat. Thank you. Thank you for hearing.
Abhishek bhai.
No,
Thank
you go first. You go first.
But sir, what you have summarized of the market, I also feel the very same. Though I'm looking at the charts very differently, the charts are indicating the same kind of a thing what you have been speaking, and the charts were not convincing enough that this bear run might continue. I might be wrong, of course, but of course the stop loss for this view is 15,600 on closing basis, and the last 2 weeks we've done nothing, just been hovering around 16,400 and 15,600 with so much bearishness. When the Dow Jones was falling to new lows, 15,600 wasn't breached. So I think the price action also seems to say that the market doesn't want to go down. Of course, we could be wrong here, but what this is what the price action suggests. So I totally concur with your view, sir. Thank you, sir. Abhishek.
Okay, let me give you a different perspective. Ki don't look at the index first of all. Just don't look at Nifty. Just look at the stock specific action, sector specific action जो हो रहा है. And that is telling a different story altogether, which is completely opposite of what you guys are saying. कि index could give a bounce क्योंकि कोई ना कोई आके पकड़ लेगा ये वो. But then as a whole, it still remains a sell on rise market. The ऐसा की बात ऐसा है कि even in today's market तेजी वाले को तेजी मिल जाता है और मंदी वाले को मंदी भी मिल जाता है. तो इट्स लाइक यू हैव टू, इट्स अ स्टॉक स्पेसिफिक मार्केट कि तुमको पकड़ना चाहिए कहाँ पे तेजी है कहाँ पे मंदी है. आज के दिन भी अगर तुम आईटीसी में बैठ गए तो तुमको तेजी तो मिल गई इतने घटिया मार्केट में भी इन टर्म्स ऑफ एडवांस डिक्लाइन रेशियो. तो तुमको मंदी करनी है तो आईटी में पकड़ लिया तो उसमें मिल गई. एंड देन व्हाट रियली caught my eye in the last 2-3 days of price action was उतना बड़ा 400 पॉइंट का रैली कर दिया. उसके बाद एक दिन पे नहीं टिका पाए बुल्स. देन सीधा वी आर बैक टू स्क्वायर वन फ्रॉम वेयर दिस वन स्टार्टेड कि जहाँ से तुमको लग रहा था कि बॉटम हो गया. सो ऐसा है कि देयर आर सो मेनी स्टॉक्स within the index or maybe not within the index which are out of the index also जहाँ पे there's still a lot of room to fall. कि as a bear what you have to do is you just have to look at your risk reward कि अभी तो तुम आईटी तो नहीं बेचोगे फ्रेश. तो अगर पोजिशन कैरी कर रहे हो तो वो तो अलग बात है. बट फ्रेशली यू वुड नॉट बी सेलिंग आईटी ओवर हियर क्योंकि बहुत ज़्यादा गिर चुका है. एंड देन ओवर हियर रिस्क रिवॉर्ड इज नॉट फेवरेबल टू गो शॉर्ट इन आईटी. बट अदर देन दैट देयर आर सो मेनी अदर सेक्टर्स वेयर देयर इज अ लॉट ऑफ रूम टू गो. जैसे कि ऑटो हुआ, एज सर मेंशन कि रेट सेंसिटिव सेक्टर है. एंड रेट सेंसिटिव सेक्टर में अभी भी बहुत सारा जगह है जाने के लिए. इनफैक्ट वो बिल्कुल घुसा ही नहीं है. वेयर सो या इट्स अ स्टॉक पिकर्स मार्केट. जिसको तेजी करना है तेजी करो, मंदी करना है मंदी करो. तो दोनों को जगह है इस मार्केट में. जस्ट दैट यू हैव टू पिक योर स्टॉक्स राइट. एंड आई हैव जस्ट शेयर दिस वन कि जो मैंने डेटा नहीं, इट्स लाइक इनिशियल जो प्लान था ऑफ शॉर्टिंग स्टॉक्स फ्रॉम अक्टूबर 19 2021. So I have just shared that most of them have come to their in between somewhere in between second and third targets. So there are stocks like Bajaj Twins and all which still have a lot of room to go down. अभी भी यहाँ से भी बोल रहा हूँ मैं. So it's like you just sell on every rise if you have conviction and you have the capital. That there is one thing that you have to be very well capitalized to be a bear. कि मतलब एक दो lot tough. Yeah, fine. I'll just keep it over here. So yeah, fact finder, please go ahead. Fact finder.
Yeah, hi. Sorry. I also agree, Abhishek, with your view that a few things that it's very stock specific, and if you actually look into the details of the market, what's interesting is that actually Reliance and probably an ITC is keeping the market up in some sort of sense. The second point is that are we really in a bear market? Typically in bear markets, or people give up. I don't see that sense that people have given up. Like in the US, retail investors have given up. They've started selling now on rallies. in India, they're actually buying on rallies still. And the second is that, I was just looking at today's numbers. Foreign institutional investors have sold 43,000 crores in this month. Now, just for perspective, in March, when we touched the previous bottom, right, 15,800 levels, we had sold 42,000 crores. Now, bear in mind that since March, the domestic inflow has actually halved, right? So there is limited room, and IPOs have started coming in, right? There was a lull in March on IPOs. So that will also draw out liquidity from the market. So you have a combination of low inflows into domestic mutual funds. Now, it's even possible that suddenly you see outflows from domestic mutual funds on a net basis despite SIPs. And if foreign institutional investors continue to run at this pace, this will be the highest single month flow in several months. I can't remember. I mean, it could potentially be 55-60,000 crores in the single month. And bear in mind, even after they've sold that 55-60,000 crores, they have basically sold 5% of their holdings in India. It's not very much. And I don't see panic in retail. So that's the reason I believe that we have not bottomed out for the market.
Yeah, FactFinder, actually, I mentioned all this data. I did mention. See, I can only speak from what is available right now. This is what is available. Now, I can't predict the future. Obviously, I can't predict whether foreigners will sell more or whether retailers will go for redemptions or whether there is panic. Obviously, when the share prices of so many small cap stocks have fallen, I assume there is some sort of a panic. It is while anecdotally we can say, okay, my friend panicked who bought Zomato, or my neighbor panicked who bought Paytm. But if you really look at the prices, obviously somebody is in a panic selling those prices, because I observe those kind of popular stocks, where people stock of only those stocks. Those stocks have been bombed out. Take even Steel Authority of India Limited, which was a very popular stock in July, August of last year. Today, you see where the price is. Tata Steel, for instance. Tata Steel was a very popular stock in June, July of last year. Today, it's bombed out completely. But where are the unpopular stocks, or which are not, where it doesn't catch somebody's eye, like a Mahindra and Mahindra, or a Maruti, or Hindustan Lever. There are stocks, as I said, the sectors itself. There are auto, FMCG, energy, infra. These sectors are doing much better than what they were doing just in the last month. And I calculated that this month we will probably have a 70,000 crore selling number by FIS, net selling. If you go by the run rate of 3,200 crores on an average trading day in this month. So I know it is the highest ever in the history of Indian capital market. This month will be the highest ever, because already we are close to February, which was the highest, which was at 45. We are at already 43 today. So it is it's almost a done deal that we will cross it. So we will be the highest ever. But still, at this point of time, we are still not seeing the market cracking. That is what is intriguing. You see, by now it should have simply collapsed. Now it may collapse tomorrow, next week is a possibility. I'm not ruling it out. Therefore, as far as I am concerned, I think we might have hit a bottom. I don't know whether it's the bottom, but certainly the risk reward here to be to be selling or to short selling, both. I think the risk reward is not good based on these factors which I explained in the last half an hour. So it could be a bottom, and then the bottom may come, say, 2 weeks later or 2 months later. But somehow something tells me, based on my experience, based on data, more than experience, my data tells me I think we should be careful for selling and short selling. I think we should not be, gung-ho in terms of selling. We should not be friends with FIs anymore. Yeah, Abhishek and Abhishek, can you just find out this 1 minute, Abhishek? Can you find out this Srujan is there somewhere? Phoenix Traders. Can you just pull him, please? Because he's requesting me. I'm not able to see him.
Okay,
Srujan.
Yeah.
SRUJN, Srujan. Phoenix Traders. Because I'm not able to see anything here. I'm completely.
I've taken him.
Yeah.
DJ Kara, please. Sir.
Thank you, sir. Just 2 minutes. So if any DJ Kara can go ahead. So I will share my view after that.
Okay, thanks a lot. Mr. Vijay, that was a very detailed and exhaustive analysis by you and very interesting indeed. I just had a couple of points to make. Technically, we are not in a bear market yet. We need a fall of at least 20% in the indices to be officially in a bear market. The only major index that's in a bear market right now is Nasdaq. And once it broke the 20% rule, it just started cracking after that very badly. S&P, Dow are both around 18-19%. Actually, last week S&P went and hit 19.8%, but then jumped back. And now it's again trying to go to that level. I just fear that if S&P and Dow also crack that level, officially we are in a bear market, and then the selling is just going to intensify. Now, obviously, Nifty hasn't reached is nowhere close to that 20% yet, which will be maybe around close to 14,700 levels. So, so if you look at it, the reason the selling is happening is that the smart money, FII, or the market is trying to factor in some events which could either be just interest rates hike, a stagflationary environment, or a recession. And if the sell-off is because of factoring in a recession, I don't think we are done with a 15% fall. I mean, if we are going to get into a recession, if I look at what has happened in the past, the falls have been substantially bigger. If you look at 2008-9, India, I don't think India went into a recession, but the markets just crashed 70%. US had this housing crisis. There was a recession in US, but not in India. India was growing, but our market still crashed, close to 70%. So I'm not very bullish at this stage because I really don't know what is the market trying to factor in. Just an interest rate hike or a recession. If it's trying to factor in a recession, I feel that the markets, have a long way to go down. And I'm just watching out this 20% level very closely on S&P and Dow. And if they crack the 20% level, I think I'll be in full bear mode. But right now, my bias remains slightly bearish. Yeah, that's all I had to say. Thank you.
Thanks, DJ. Just a point here before we take to this. So, see, now the defining of a bear market, somebody has defined somewhere that it should be 20%, and we are blindly following it for that. More important, I would say, is what happens to stocks and sectors. For instance, India, if everybody looks at Nifty and says, okay, we've fallen only 15%, so what are we talking about bear market? But if you look at Bank Nifty, it has fallen 23%. If you look at mid cap, it has fallen 20%. If you look at small cap, it has fallen 28%. But I am, even with all the statistics, for me, a bear market is when a stock will lose nearly 30-35%. And there are any number of stocks which are popular, which have lost 40%, 50%. So that is what I would think of it as a bear market. That while the index may be held because of certain sectors, and all of us, most of us, do not play the index. First of all, index is meaningless to most of us because we don't trade in the index. Very few people actually trade in the index. So what matters to us is, okay, we did an investment, it has come down by some X amount. When will we come back to our break-even? And it looks like for a lot of people, break-even may be years ahead. So in my humble opinion, we are in a severe bear market in many, many stocks and sectors, which is not shown on the index. So that is my thinking. So whether S&P goes down, whether people selling, I don't know about that also, because Nasdaq has come down 32%. Whether 19.5 on S&P, will it become a bear or not a bear? It's an academic discussion finally, because if people are willing to buy a stock, they will not bother whether index has fallen 19.5 or 23.5. Nobody seems to be interested in buying the Nasdaq index. It's fallen 32% without any noise. Silently, like a stealth bear market is going on in Nasdaq, and nobody seems to be bothered. Now I'm looking at whether are we going to have a stealth bull rally, which lulls us into sleep, thinking that kitna jayega. So it will go to 16.2, they'll hammer it. It will go to 16.4, it gets hammered. What if it goes to 17,000? Something like that. Then can we take advantage of it? Can we buy into good stocks now? Can we buy into stocks at good prices now to ride it? Because you see, in a bear market, in a bear market of in 2008, we fell 65%, not 70, 65. That's not does not matter much, 5% here and there, but 65. But Hindustan Lever went up during the entire bear market. So can we look at stocks like that? Should we just abandon the market at all? I feel at this point of time, one should not abandon the market. There's a lot of good stocks available at reasonably good prices. So that is how that is the purpose actually of this thinking, that people are damn scared. Whatever I'm hearing, talking to people, and when I see body language of people on TV, they seem to be very scared. See, people never use the word bear. They are talking of word bear, which I've never seen CNBC people using it. They don't want to use it, that word. They are not talking. And I've seen the uber bullish strategists having gone into the bearish camp and saying, Maro re sala, 100 point, Maro. So that attitude has seeping in. See, these guys are having followers of 25,000, 50,000. So that obviously when the leader says, hit it, and it comes down. See, yesterday somebody would have sold it. Day first day on Monday, for instance, somebody sold it. He didn't get anything. Tuesday when it went up, he might, if without panic, if he sells it, by Thursday he's made a killing. So it's so easy to make a killing, especially in the last stage of a bear market. It's always very easy to make a killing, is what my experience has been. So if see, take in 2009 also, between February 20th, you take January when Satyam fellow said that there is a scam in between. Between then and March 9th, if you simply sell at any level, you will make money. There is no bad news. Nothing was happening, but that is what happens in a last stage of a bear market. I don't know whether we are in last stage of a bear market or this is only the end of the beginning or end of the end. It may be just the end of the beginning. So we may have another big drop somewhere later. Right now, it is telling me I should be afraid if I'm a short seller rather than afraid of being long at this point. That's my limited point at this point.
Yeah, I just wanted to make two other points. If you look at Nasdaq also, right? Mr. Vijay okay, yeah, thanks. Nasdaq also, except for the FANG stocks, the rest of the Nasdaq had started tumbling months ago when we were celebrating all-time high. Outside of FANG, everything else was tumbling, and the FANG stocks have just started falling, which is where Nifty is right now. The index is still high. Couple of stocks that are being used to manage Nifty, and the rest of the market is falling. So, and honestly, if we are going to get into a recession, are we saying our index only corrected 15% in a recession? That's something I don't have an answer to, and I don't think that's really going to be a scenario where we just fall 15% on a recession. And second is, a lot of people are saying that, our markets, FIIs have sold so much of quantity and our markets still haven't fallen. They're resilient and all and so on. But you have to realize that short selling has been banned by SEBI. So in prior falls, they might have been taking the market down through futures and not through cash. But right now, they don't have an option. They are taking the market down through cash selling only. So we can't compare the 2000 crash cash selling by FIIs and say, we compare it to this time and, our markets haven't fallen, because we don't have at least I don't have the option data for that point of time. So, yeah, that's it. That's it
thanks,
from me.
DJ.
Thank you so much
DJ.
for your time.
Yeah, thanks. Thanks, DJ.
Hi, Vijay. Can you just say what is a recession? Can you define it?
Recession would be 2 quarters of negative GDP growth. If you look at US, it's already done 1 quarter with minus 1.4, and if they do another quarter with negative GDP growth, that officially puts them in a recession.
Sir, actually, there is no actual meaning for the recession, sir.
Okay.
So I
So
think
don't
you
worry
mean to
about.
say Sri Lanka is in recession.
Yeah, that is what the true is. So people losing jobs, prices inflating. So this is what the recession means, sir. So actual GDP 2 quarters, there's no nothing like that in the recession. So there's no meaning of the recession. So what Sri Lanka is going through is perfect recession because prices are inflating day by day and people are losing jobs left and right. So this is what the I know as per as me my knowledge. This is what the recession is. So India and US, no one is losing their jobs. So prices, I mean, all commodity prices and every other prices has been stable. Okay, inflation there, I do agree. So, but prices are stable now. So where the prices have been drastically gone up, right? That is what my knowledge about the recession. So apart from that, so coming to the technical points, so uh, yeah.
Look at the startup space. Look at the number of jobs that have been laid off. Like, so the amount is crazy. There are so many of these new startup unicorns, tech companies, whatever you call them. Everyone's been laying off people left, right, center already in India. And this is I'm talking about companies like Ola and all of these new startups, Jojo BI, Zomato, Hua, Swiggy, Hua. Everyone is actually laying off people, which is not visible to the common eye.
Can I add a few points, because I think in general there's a lot of misconceptions of the startup ecosystem. I think, if I'm not mistaken, there was a report recently by one of the company, research houses, not equity research houses. One of the research houses. There's it on. I think it was India Incorporated that wrote a report on India's 100 unicorns. And what's interesting is that I think the total number of unicorns basically employ only 300,000 people, in directly. And if you think about that, just the Indian IT services market is about 5 million. So when you really compare the unicorns and all these startups, it's actually a very small number. I know we like to make a big deal out of it, but it's not as many. Yes, they have an impact on the job market, but again, there's a very interesting report by the Ken that was published about a year and a half ago, which talked about the 10,000 engineer rule. So essentially, they looked at all the unicorns and all the startups which had a $200 million valuation, and they came to a figure that the total number of software engineers required for all these startups was only 10,000 software engineers. And if you compare that to the entire Indian IT services, as I mentioned earlier, it was about 5 million. And they, in the Indian IT services, I think adds about 250,000 people every year. Now, I just wanted to also, point out something on Cynic about, you mentioned about the fact that the U.S. 10-year has actually, people were talking about it going to 4%, and it's now actually at about 2.7. There was a very interesting report, and you had, alluded to it earlier, called the Bank of America, fund manager survey that they do every month. I recall there was a survey about 2-3 months ago, wherein they asked pension funds as to at what level of US 10-year would you start allocating money back to debt. And that figure was 3%. That was what the survey said. So when you look at the US 10-year, you have a couple of things to keep in mind. One is the liquidity of the US 10-year is amongst the lowest levels since May 2020. So the sharp moves of the US 10-year is on very illiquid, market situations. That's one thing. The second thing is that at 3%, a lot of pension funds find it very attractive to reallocate money away from equity into debt, because 3% is not bad for them. And so to that was probably driving what you're seeing in terms of rising bond yields. I mean, the falling bond yields in the U.S. And as I mentioned earlier, obviously everybody's talking about some sort of a slowdown/recession. But bear in mind, I think the big problem that we are facing today in the market is that almost every analysis has been done based on either 2000, 2009, 2016, 2018. And why I think this is completely incorrect to do is because this is actually the first time in our history where we are actually seeing the central bank saying, listen, I don't care about the market. I want inflation to go down so that the common man doesn't get hurt and I have elections to win, which is why, and they've obviously admitted that they've made a mistake. So I think this, by commentary made by the US Fed is and the ECB is far different from any commentary they've ever made in the last 20 years to 25 years. In fact, the only time that they made such commentary is back in 1940s.
Okay, point taken, fact finder. We'll come back. Anil, sir, would you want to say something? Anil Bhatkar, sir.
Yeah, I'm for all the listeners here. I'm a long-term investor, so my views may not be exactly correct. That okay, what is likely to go down tomorrow or a day after tomorrow. I also get panicky here and there, listening to all of you, and sometimes try to take advice also from some of you. But in fact, I'm almost 95% fully invested kind of thing. And I have always been like that since more than 2 decades or so. So my views may not be exactly correct as per the current market situation. But I'll say a couple of things. First thing is that the job loss and all that, like third side just said, that see, it is job losses in India. It is still very, very few, remote, and US also. It is. I advise many startups. Even now, I'm retired, but I advise startups on technology side. And I'm telling you, it is extremely difficult to get two good programmers in any state in US right now. It is very, very difficult. Only place where you can get some good programmers, maybe you can get in Europe. Even in Amsterdam, you can get, but in other places, it is extremely difficult. In India, the salaries are, it is impossible to replace people either in a startup or in the traditional companies, whether it is related to IT or whether it is related to finance. The job market for average B plus people is extremely good. And I don't think that any kind of recession in the job market is there right now. Second thing, I want to say is that see, the dollar has gone up a lot, and many countries are resenting it. So I don't expect the dollar will continue to go up vis-a-vis other uh, um, uh, currencies the way it is going. It was COVID, and then it was Russia-Ukraine war. There was a fear, and people started bringing it up. But I think there is a lot of resentment from Japan. There is a lot of resentment from some of the European countries. And I think the US also has to think that whether they can keep on continuing dollar at this rate. So if the dollar is not going to go up much with respect to other currencies from now, then the question will be there, even if the yields are 2.93 or 3 or whatever it is there, whether it is already factored in or not. Another point on global thing is that I believe, and I may be totally wrong, I may be 100% wrong, but I believe that somewhere Europe and Russia are now coming to some sort of terms that within a month or two, they have to come to some sort of compromise. There is no way out for any country to European country, EU countries to go and fight against Russia. They can give more arms to Ukraine, but the way you have seen in Azovstal, the kind of things are happening. The way you see all the ports have been blocked by Russia. You can't take out any grains out of it. The way you see the now United Nations to UNHRC to everybody appealing to Russia to allow some export of grains from Ukraine, and Russia asking in return that take away my sanctions and we will do it. To me, it looks that 70% of the objectives of Russia are already met, if not more. They have already captured almost the southern side, and they have captured 100% of nuclear power or thermal power generation sites of Ukraine. Today, if they want Ukraine to be completely out of electricity, they can do in a couple of minutes. That kind of situation is there. Finland did that, and I was having some conversation with the ex-prime minister of theirs, and I found that, okay, he didn't have any electricity for a couple of days, not only for one day, but for a couple of days here and there it was going. So now I think that the EU is also thinking that they need to sort it out. They can talk about anti-Russia, all that, but in reality, they cannot do anything with the ruble already reaching 62. Another thing that looks to me is that Ukraine is also the current leadership of Ukraine is definitely losing its weightage in EU, and they have started accusing more and more accusing Germany or France or other countries. To me, it looks we will have a solution, some sort of temporary solution within a month or so in place in Europe. It is not going to go to nuclear war. It is not going to go to NATO and Russia war. Some sort of compromise is likely to be reached. Maybe it will be revised again and again, but that is likely to be out. Next is that I will say that is it necessary that again and again I keep on hearing that we have not bottomed out. Is it necessary that we bottom out? If bottoming out is there in a long bear market, and I don't know about this, I'm not a technical guy, but is it necessary that we should bottom it out? Why should we not say just be there at 15,500 or 15,000 or 14,000 and move on? Maybe it is still a part of a long-term bull rally only, and there is no bear rally at all. If I look at Nifty data, the last point I want to make is very quickly is, if I look at the Nifty data, 36 companies have so far given results. And I'm looking at their these companies' profit growth and sales growth, just to not to take too much of you people's time. I see quarter-on-quarter profit of 36 companies on an average basis are 13%. Sales are up about 5.2%. Year-on-year quarterly sales growth is 13.5%. Quarterly profit, year-on-year quarterly profit, this is all screener data, is 25%. And even if you look not only this year, even if you look 3 years, 5 years, 10 years, the companies that have already declared results, 36 companies, if I see profit growth for 1 year is 26.8, 3 years 24.8, for 5 years it is 18.7. So I don't see any region where we should be so pessimistic the way we are there. We all know that India is a growing country. Trading is a different thing. It may, for 3 months, 6 months, whatever it is, I do not know where the price will be there, whether it will be 10,000 Nifty or 12,000 Nifty. But to think that, okay, we keep on talking so much being pessimistic, where 70% of people in the stock market are small investors. If we keep on talking in such a pessimistic mode, what are we doing? We are telling these small investors who, like Abhishek had put or somebody had put today, that about 10 lakh people are having 10 lakh plus investment in the equity market. Now, if we are just scaring all those people who have come to the market, this business, most of the business are not going to go anywhere. Maybe 5%, 10% business will go anywhere. But to tell, like say, the Tata Motors, Larsen, Britannia, here, HDFC, Asian Paints, whatever be the company, even Bajaj Finance, all these companies, will these be out of business in the next 1 to 3 years? No, it doesn't look like. It only looks like that they will be more stronger. There will be 1 quarter, 2 quarter, maybe 1 year they may suffer. But to think that 3 years or 5 years down the line, the people who are having more than 30% of the market share will not be better off, it is difficult to say. So in my opinion, we are from the investing angle, not from the trading angle, we are still in the long-term bull market. There may be temporary setbacks, but there is no reason that we continually keep on being so pessimistic and scaring everybody on the street. You take the newspaper, you take the so many channels, you take Twitter. Sometimes I feel that the people who are extremely talking about negative and bear market are not doing anything good for the long-term progress of India's equity market.
Sir,
whether
I
it is
agree
good
with all
or
the
bad. This is my point.
points, but the thing is that you cannot be buying. Yes, sir, agreed, sir. Agreed. So, but the right to buy any company, I have
Please go
what I
on.
believe that is what you can buy Bajaj Finance for 2 bucks or yeah, thank you, sir. Sir,
I attended Sharad Sir's yesterday's, and I felt like listening to so many speakers. Little bit felt I should forget about buying. I should be out of the markets.
So why don't you do one thing?
He's right. He's
Take
right
your
on many
I,
things,
I
but still.
I would suggest taking your money and actually put in the US market, sir. It's far better. It offers you more value. If you look at the Indian market back in the year 2007, 2008, India's ROE used to be almost 20% to 21%. It was the highest amongst the emerging market. It was almost 1.5 times the emerging markets. India deserved a P multiple that was a premium to emerging markets because our ROEs were 1.5 times. Today, our ROEs in India are the same or lower than the US, but our multiples are the same or higher than the US. Why would you want to, buy Indian stock market?
I think definitely for fresh buying, US market, especially Nasdaq, is offering very good opportunities, and I agree with you.
So one more thing I want to just tell you is that what has happened. Have you seen the very interesting tweet that Mr. Nitin Kamath of Zerodha mentioned? You should
Yeah,
look at it.
yeah,
He
yeah,
actually,
yeah.
yeah.
I've seen. That is what I
So
was
exactly.
telling
So the
Abhishek.
point, yeah. So the point is that a lot of retail investors in India actually have a disadvantage. In fact, I think it's much better for the retail investors to actually invest through platforms like the mutual funds because they don't have the ability or the scale. Today, what is happening is that the technology is in the hands of a few, and then there are many people who are retail investors who don't have technology and the data sources. So, as a consequence of this, they are always as a disadvantage. Now, remember that cash market volumes in India peaked in in February 2021, almost 15 months ago. Since then, most of the market volume has been driven by futures and options. And futures and options is a zero sum game. So if some retail investors come in and they lose money, the HNIs are making money. Shouldn't you be discouraging retail investors to come and start losing money? Because we all know futures is a zero sum game.
The problem is that retail, mostly at least new retail, comes to the market even through mutual fund only when that particular type of mutual fund is at the highest. So today, if you look, most of the people who have come in tech-oriented mutual fund schemes are in Nasdaq, etc. They have come only in the last 1 year or so, not even 2 years back, not in March 20. And definitely, the point is that whether they come direct or whether they come through mutual funds, they select the type of mutual fund which is based on the past performance. It will be far better. Your point is correct, but it will be far better if they come through, say, sort of benign ETF like maybe Nifty or variants of Nifty, not going into sectoral. Your point is right.
So, and what makes you believe that the Indian economy is in a good shape? I can give out several data points to tell you that the Indian economy is in a very bad state. And I'll give you one interesting data point that nobody discusses. Mobile phones. Mobile phones in India in the March quarter that just passed by were down 17% in the terms of handset sales. Now, in terms of size, the mobile handset market is bigger than the car market in India. That mobile sales, I think, on just smartphones was a $38 billion market. Maruti's full year sales is $12 billion, and Maruti has about 45% market share. So the point is that if you see all the two-wheeler sales is down to a 10-year low.
I mean, I'm just saying that the economy is not in good shape. Every single consumer company is talking about negative volume growth. So I'm just saying we have not even seen the worst in terms of reality.
Sir, I will only say one point here. I have been in banking since 1979 January, and this has been a perennial debate point since then. I have always been seeing every year, right from the senior most economists at the banks or on the TV or elsewhere, a couple of my very close friends, we have always been arguing since then till now that always there will be 40 to 45% and sometimes 70 to 80% of the economists who will always be telling that Indian economy is in bad shape. But even before 1991, to say that from 79 to 91, did we not grow? We grew. Even from 79 to 91, whatever period I have seen, prior to that, I have not seen. I have been in banking till then and before moving to technology 100%. But I have seen even then India has been growing, if not every year, every 3 year or 4 year. You see, it may not be growing at the speed of Indonesia or China or Korea, but it has been growing. So to say that in 2022 we will not grow for the next in another 3 years, as I said, your point may be valid if I take it for 3 months, 6 months, 1 year, which I do not really know. I cannot. I do not. I'm not equipped, I'm not expert in the short term predictions. But if I look at India past, say, 40 plus years, 44 years of my service record, I have not seen India degrowing for a 3 year period, even in between 94 to 99. I'm not going by Sensex. If you can say 91 Sensex, it was not beaten till 2004, or 94 to 99, we had one bear market, then 2000 to 2003, we had another bear market. We might have had bear market, but it doesn't mean that even in that period, Indian companies, good Indian companies did not grow. There may be some sector which didn't grow, but overall, if you look, even from 94, you take the bank's balance sheet, you take private banks' balance sheets. From 94 to 99, it grew phenomenally. 99 to 2004, it grew phenomenally. And banks cannot grow if economy is not growing. So I'm not talking even about the public sector bank, because there you can say that okay, everybody gave loan only to infra and nothing else happened. But even if you take the private sector banks from 94 to 2004, which was one of the worst period in Indian history, the economy or these banks grew, and definitely at the same time, people who have been working, whether they were there in technology, whether they were in the finance, whether they were in the private sector, it has been a phenomenal growth from 1994 to 2004 in India's private sector industry.
Sir,
And
just a
while
moment,
from
just a moment. In 91, our economy was $300 billion. In 2003, it was 600 or something. So from that our point, it's easy to grow. But at 3.2 trillion, it's very difficult. That's my point.
शरद जी, आई जस्ट बार्ज इन हियर एंड आई हैव, मेरे को कुछ चीजें बतानी है जो इंटरनेशनल मार्केट में है और इंडिया में अभी तक नहीं हुई. फॉर इंस्टांस, आई वेंट टू डबलिन इन 2005. Financial products are so innovative there that if you go to any fund and you want to buy, say, Nasdaq 25% in one unit, you want to add 10% Nifty in that bucket, 10% commodity, you can within 100%, say in 1 rupee, you can buy 10 things. And the fund will give you a product of that kind as per your wish, which is never happened in India. Secondly, capital market reforms never happened in India. There was a white paper with Government of India in 2005, and it was decided that large funds houses will come to India and hedge funds will be established. They refused to come because we don't have that much of infrastructure. They want 2 lakh square feet of office in one building. In Bombay, we don't have. Then they wanted very high speed internet with no power cuts, etc. So they refused to come to India just because we are not so good in infrastructure. But now all those have been achieved. We have 4G, we have large buildings even in Bombay, but there is no initiative in government's part to rejuvenate that talks with his funds so that foreign funds come and establish their office here on a large scale. So, capital market reforms can only take you towards further growth. And this bear market, actually, what we are talking about, yes. So, then the effectively bear market or bull market can be known to us. Right now we keep on guessing for 1 month that what is happening in US, what is happening in Russia, what is happening in Ukraine. Then once we lose our all wealth, then we come to know, okay, we were passing through a bear market, a small investor gets pissed off. That is what is happening. So my point is that we should all push on for reforms. SEBI is doing nothing. Second thing is, nothing is happening on fraud fronts. Balance sheets are having frauds, and these are going undetected, and we investors are getting cheated. And India, there is no rule. For instance, in US, if you do a fraud, there will be short seller report tomorrow, and the share market will be plunged of that company from $10 to $2, and all the investors will get compensation. In India, we don't have that much faith on the judicial system. So that these are the reason why we are suffering, we are talking here, and there is no improvement in the system. That's what I wanted to say. So maybe development of India is industry growth is one thing, but side by side, judicial system, infrastructure system, good hedge funds, unless they come, we cannot be a global player actually. Thank you, thank you. That's what I wanted to say, Sharadji.
Yeah, thanks, Manish.
Sainik sir, I fully agree with you. It is a roaring bull market. Almost everything is up. And my price target is 21,212. I'm thinking of buying technology. I'm thinking of buying banks. Everything I will buy.
Okay. First of all, you cannot agree with me because I never talked of 20,000. I never talked of any.
No. Only
so how you can agree with me?
No,
how you can agree
the first part.
What is the first part? What is the first part?
No, I agree with you.
What?
Okay, it is a bull market.
I didn't say that.
Okay.
So I didn't say that. So where is the question of agreement? So there is no agreement. I only said that there is not the amount of negativity which is there is not showing in the prices. That's all I said. So
Yes, true.
So I also said.
Point well taken. I'm sorry.
No, nothing to be sorry about it. I'm just saying I have not clarified the point well enough for you. That's about it.
Okay. On my own, I am saying my price target is 21,212, and I will be bearish if Nifty breaks 12,000.
Okay.
And see, and in any market, there will be certain scripts which defy logic, which are going up, which are going down. And good stocks like ITC or Lever, they will always be maintained at a particular level. वो 5-10 रुपया इधर उधर हो सकता है. They will be always good. You dabble in good stocks, mind you. Sainik's up. You dabble in good stock.
Sir, I dabble only 2 stocks, sir. So only ITC I dabble.
So I'm only saying that your view might be that you don't see bearishness. You don't. My only point is If the market cap goes down by 7 trillion today, what else do you want? Now we are at 243 trillion, and you knock off this LIC. So we are at 237 trillion. What more do we want? And according to me, the market cap will come down to 160 trillion, come what may, because it cannot be more than the GDP. Market cap cannot be more than GDP. You read up anything, any literature, anything, except US, because in US, a lot of foreign stocks are listed. So if you knock them off also, you will see. And another thing, sir, एक गरीब लोग मर जाएगा, ये टाइटन 130 का पी में लेके पीडीलाइट 100 का पी में लेके क्या करने का है? In which book or which manual it is written that you buy such high PE stocks and you will make money? No way. We are actually barring few stocks in which you are invested and which I am invested. Rest is rubbish. And Mr. Bajpai was saying that pessimistic. It's not pessimistic. It's realistic. If we don't show the color to people, how will they know? How will the young investors decipher what is good and bad? Now, if you talk of $200 billion going up to 3 trillion, so it's growth over a period of 30 years. But now to have a growth of that magnitude and kind is impossible. What they are talking, what
I agree
they are,
with you, sir. I
no,
did
no,
not
just a
say.
moment. No, just a moment, sir. See, I am not against you. It's the way I speak. So pardon me for that. I'm saying is 18 trillion भी इसमें इकोनॉमिक वैल्यू डाला है, नॉमिनल जीडीपी. अरे नॉमिनल जीडीपी तो ज्यादा हो जाएगा क्योंकि इन्फ्लेशन 15% हो जाएगा. तो this government has given us nothing but wrong data, wrong entry points, wrong pressure points, everything wrong. So, okay, I must be your age only, but things are bad, sir. For me, it's good. I'm rocking, but generally speaking, things are bad. Things are bad. Howsoever you may say, this inflation 15%, it is 30% inflation. 30%. If you add a lot of things, now they will add typewriter and video cassette, so inflation आता नहीं है.
शरद जी, one
Sharad ji, I have been attending your last 2 or 3 Twitter spaces, and I really highly appreciate the way you put the caution in the mind of everybody, and extraordinary exuberance, like somebody had said 21, 21, 2. Those kind of things, whatever your views are there, I sincerely appreciate that you really put a sense of caution in the mind of everybody.
शरद जी, मैं एक
No,
बात आपको
no, just a moment. Now, for me, whether you buy or sell, it doesn't make any difference. Okay. It is, I think what I know, what I understand, I should tell people. That's my only thing. It can be wrong also, but I tell.
नहीं शरद जी, बहुत बहुत धन्यवाद. आप हम लोग को सबको सिखाते हैं सब. एक चीज जस्ट मैं आपका ये जो अभी आपने कहा ना, उस पर जरा सा एक अपना व्यू रखना चाहता हूँ कि जीडीपी से ऊपर मार्केट कैप हो सकता है सर. जैसे आप समझिए कि एक फैक्ट्री का वैल्यू का प्रोडक्शन का वैल्यू है 100 रुपया, बट उसका प्लांट 300 रुपया होगा, तब तो वो 100 रुपया का वैल्यू क्रिएट करेगा.
Sir, no. On this thing, I don't want to argue because I am very much convinced about what I am saying, and I know what I am talking.
देखिए मेरा ये कहने का मतलब
But just a second, sir. Just a question to Sarasa, sir. You have been 2 decades, right, sir, in the market, right?
No, 4 decades.
Okay, four decades. Oh, okay, he is in the market for the 4 decades, right? So as I am from the market from 2008. So I am watching the market from 2008, sir. So what I know is I got a data, so which saying it from 2001. Okay, from 2001, 2022. Okay, which is current year. Current year we are -4% or -9%. Okay, with the index levels. All the years which in market has beaten the inflation returns. Okay, market has beaten the inflation, which is more than 6%, 6.5%. In terms of returns, I'm talking. Okay, from 2001. Okay, so market will continue to go up and continue to go do good in the coming days also, sir. It is not that economy is doing bad. So cell phones market is coming down. So market has to come down. Cell phones market has stagnated. So that just a second. Just a second, sir. Let me conclude. Okay. Yeah. From 2009. So when market crashed, so they were DAS, they were FIS and DAS. So FIS now they are selling. You don't know at what level they bought, right? So you don't know. Literally, we don't know at what level they bought. They might have bought Reliance at 800 or 900 or 1,000 rupees. You don't know where they bought, and they want to book now, and they were waiting for the lower levels to come and to enter again. You don't know that why they are selling. Wait, let me continue. Let me finish, sir. Let me finish it, sir. 2008, what is the DAA flows? Now, what are the DAA inflows? And you cannot tell the market will crash by to 5,000, 7,000, 6,000, and market will come to 2,000 also. It never happened. If market if it never happened in the earlier also. Max to max is market can come up 12,000. That's it. You cannot bring the compare with the economy and the market, sir. Market did well from last 20 years.
Keep your voice down, please.
Okay, Sujan, I take your point. No, the point is not. I mean,
okay,
what?
So the end of the release, market's not going down. If you're 21,000.
No.
I am also a bear, sir. It's up to today.
Okay.
So I was telling from October that market will come 15,500. From October, Vijay sir also know. From October, I was telling market 15,500 will come, and it has made a low of 1671. So it is not like that I am bullish or I am bearish. So I'm basically a cat. So whichever the opportunity comes, I jump into that. I'm not a bullish or bearish.
Yeah, I appreciate Sujan. It is just that different people have different point of view. They may have some reasons for it. Sharad Bhai saying 12,000. He definitely should have some reason. Like Vipin Bhai saying 21,000 for it. He also has obviously some reason. People like me don't have any targets, but on downside, I have got a Lakshman Rekha which I put. So it's okay. At the end of the day, I think we bring to this table different viewpoints. Let's keep it at that. I just wanted to know, third side, would you want to speak?
Went off. Can we just get him back? And
yeah. If he's there, I'll get him back. No, yeah. In the meantime, third side.
It's not. I also have data so that I shared the data, sir. From 2001 to 2022, only 4 years market went to negative returns. All the years it has beaten inflation returns. So this is what my view is, sir. So he was telling economy is bad and everything is bad. That is good, but ultimately it is market. No, it is in no one's hand.
I understand. Okay, the studies clearly say it's okay. We will come back. Third side. No. I just want third side to speak. I mean, he is a very good analyst. So I would like him to throw some light.
Thanks, Vijay. I was only trying to do my best. Even I am trying to survive the market. I think Anil just recently raised a point referring me that I put out some tweet on that IT hiring may slow down. And there has to be some impact. I'm not going to say that the impact is going to happen right now. If you go and talk to people in IT, their HR desks have been busy hiring people. Everybody knows about the attrition and everything that has been going on. When do people buy homes? When do people buy autos? Right? When they get a big promotion, when they change a job, get a big salary raise, when they move up in life. And that has been the case post COVID in the entire IT sector. IT sector is pretty crucial in India for the urban demand, particularly of these big ticket items, realty, autos, durables, everything related to all that. So ऐसा नहीं होने वाला. It's not going to happen that things are going to change tomorrow, right? You're going to wake up, walk to your office wherever it is, and boss going to be saying that okay, your salary is gone from 10%. But you have to contend with this fact that Russia-Ukraine thing has happened. A lot of corporates have pulled out of Russia. There has been a revenue hit. IT budgets are under pressure. Will come down. So growth will be a challenge in IT for sure. So as we move into June quarter earnings, we'll probably will get to hear this, that job attrition is becoming less of a problem because growth is declining. In that sense, I think IT selling isn't done. Right now, we have sold down quite heavily. Probably because we have sold out quite massively, and there is chance of double bottom here. So we may gravitate till earnings in July, and then maybe another whack down because margins will be poor at least near term, and growth guidance will also come down. So that is definitely a risk if you're holding IT for beyond that time. Now, conversely, in the near term, autos, consumers, you pointed out that palm oil export ban has been stopped. HUL has been looking in momentum. So clearly, but HUL has already caught up back to its multiples. HUL hasn't really seen any multiple compression. HUL is back trading at 54, 55 times earnings. But because of this sort of incremental positive news flow, both in autos as well as consumers, to an extent consumer durables as well. Steel prices have started coming off, aluminum prices have come off. So there are these tailwinds that while incrementally growth will be slowing. I was just looking at retail data in auto. It is sort of flattish over the last 3 months. So I don't think demand will decline immediately. Margin tailwinds are there. So autos, consumers, consumer durables will probably do better despite they being rate sensitive. Going into festive season, I think the switch somehow happens around festive season when in these sectors, that's a view now, and I kind of change my view three times a day. I'm data sensitive like Fed. But I think in the near term, autos, consumers, durables, all will keep on doing well till that festive season disappointment takes place. IT may bottom out, may rally 5-7% from here, but then will run a risk of another drawdown from earnings. July, August, something in that time frame. Later in the year, then that's when when growth kind of stabilizes for IT and margins start inching up. I think then again the sector rotation happens. So I'm not a macro guy. I kind of look only at company specific or sector specific stories or sort of sector rotation. So at this point of time, that's what that's what my current view is. But right now, sorry.
Yeah, just one thing I would like to add with respect to the auto sector, where you are talking about the inflation and your raw material costs going up and all that. So that way, your auto sector margins are going up for the companies. But then that is the supply side, the part of it in terms of the OEM. What about the demand side? So demand side, as and when people start realizing that the inflation is rising, so demand will actually reduce.
Demand will not reduce till the job market does not weaken and starts impacting. So I think the demand के साथ क्या है कि incremental news flow, year-on-year numbers will look good simply because of lockdown, right? And demand in the near term, because it has been constrained, by all these chip issues. So it'll be sort of stable, It won't. If I look at retail, I just looked at retail numbers till yesterday, and demand seems to be stable, just as it was the month before and the month before.
No,
So
but
I don't.
moreover, just 1 second. So moreover, what I am looking at in the auto industry is, if you look at a car, let us say like a Fortuner or something. So that is like, it was about 35, 36 lakhs if you look at it a couple of years back.
Right.
I'm talking about, and right now it is about 50 lakhs. So
Right.
the kind of inflation that's happened in the pricing is just crazy. And if you look at the revenue part of your OEMs, that has gone up partly due to the
You are
rising.
spot on. You are spot on. So at some point of time, this worsening affordability will meet a deteriorating job market. But my suspicion is because incremental news flow अभी positive रहेगा जिस तरह से टीवी पे आता है. So incremental in in absence of any earnings catalyst, incremental news flow is all that matters for the market. So in the near term, if you think in palm oil, abhi palm oil ka ban hata hai, kal jayega, HUL, if market is good, HUL will go up 3-5%, whatever. So the thing is, and similarly, whatever companies, steel prices come high, aluminum, that's why iShares and all these companies have been rallying so hard. Ashok Leyland posted great numbers today. वो company एक ही quarter में पैसा बनाता है, but it will also rally tomorrow if the market is okay. So the point is, all these companies, autos, consumers, are sitting on good earnings, right? And they have this positive news flow going into the festive season. And this, this worsening affordability and deteriorating job market will not actually hit these markets till, I think, festive season, I think, runs a risk of disappointment. वहां पे जाके कुछ हो सकता है. उससे पहले short करना और negative होना, I don't think, at least I won't do it. But things.
Sir, I just want to ask you a question. So, I always believe that the cost of capital is the most important thing for any kind of sentiment or psychology. What really happens if we have a spike of 200 bips on the 10-year in India, and what does it do to sentiment?
I mean, depends on what product are you talking about. If you're talking about SUVs, the kind of product Tata Motors has been selling, then it doesn't really matter. Whoever is buying, he doesn't really care. If he needs to see 65-70% of this demand is replacement demand, and replacement demand is when I get a new job and all those kind of things that I talked about. So it depends on what kind of product. If you're talking about your two-wheeler market, then obviously rising interest rates, things 50,000 bike is now 70,000 worth. And on top of that, you increase rates. So there will be some impact. Whether the impact happens in the near term, abhi to 200 bips increase nahi hua. So the point is ki when do these factors or influence or simultaneously hit the market? Then the demand will get hit. Abhi kya hai ki near term numbers will simply look good because chip issues have been constraining production. So you're going into a period where YOY you have a base effect, and you are sitting on good earnings. And chip, because of slowly lifting up of chip issues, your numbers are going to look okay, and you have margin tailwinds because of raw material prices declining. At least the news flow will be on that. So yeah, it will impact, but when will it impact? You don't want to be shorting the stock now and iShare going into breakout and going to 40,000. That's not a. So it's more about like, when do I time the trade? I think
sir,
you are
but
talking.
one thing, if you look at the auto index as such, I believe that the markets foresee the things that's going to happen going forward. So if you look at the auto index that is there, it's almost at 2018 highs. So are you telling me, see, maybe the margins will be higher than even 2018, but the demand is definitely not where 2018 was. So if you look at the structure in terms of purely technical perspective, as a triple top, or like if you can call that triple top, that's what's happening right now and on the auto index. And I see very less to negligible chance of it breaking out from there, looking at the circumstances on the ground. So maybe you could have a correction until the festival season, and that is when the reality will kick in.
I mean, that is for general, but even, I'm waiting for Ashok Leyland. Ashok Leyland will spike up. This quarter is very weak for CV sales, generally, seasonally weak. So at least I know that once it runs to 140, I have to be comfortable with valuations. Valuations are crazy in many places in autos. I mean, I have seen Maruti's EPS. I'll put some on tweets tomorrow. But the thing is that I know what you're talking about. There are very worthy, shortable candidates with an Maruti is clearly one. Ashok Leyland is another. So these are companies which are doing badly in terms of business performance as well. And their multiples are quite stretched. But it's just about when do I put the trade on, पहले भाग लेने देने का, सब कुछ discount कर लो, सारा news flow हो जाए, तब आराम से short करेंगे ना, because you may have to hold.
Let me ask you a question. Auto index made a high when? Why did it make a high in October or November?
Last year.
Yeah, why? Why did it do that?
The festive season.
Could it be because it coincided with the bottom in oil, somewhere around 67, 68?
See, what I've seen, there are certain, अब मुझे पता नहीं क्यों हिंदुस्तान में ऐसा चलता है, certain seasonal trades. For example, Voltas. Why was Voltas 1300, 1350 just now? गर्मी हो रही है, AC बिक रहे हैं. हर साल बिकते हैं. Why does every year you see October, November festive season, the CNBC, strong demand, and if the market momentum is fine, then these guys will run up. because that's what general retailer understand. The market demand is fine. Similarly, Ashok Leyland, particularly CV sales, March quarter is their seasonally strongest quarter. It will always run up. You just check. I don't know why this stupid seasonality work, but this is so you can find other 1,000 reasons for it, and there may be other 1,000 reasons like oil being low and so on and so forth, and they may be also be streaming on CNBC. But I think it's just
No, I'm looking at correlation 2006, 2007 because auto index actually topped out before 2008. So they anticipated the rise in oil, and because of oil, the central bank had to interfere and raise interest rates over there. So it was a double whammy. So it's a similar combination which I see now. So that's why I'm asking that why did it do that? And most of the problems are the trucking industry and in US and everything. It's actually having a huge problem because of refinancing and other things. Because the run up to the interest rates was because a rise in oil. Not only oil, it was actually energy. If you consider natural gas and everything. So even gasoline. So suddenly it puts a psychological threshold or something like a resistance to say that why should I buy now? Because what am I getting into? I'm paying taxes, I'm paying insurance, I'm paying fuel, and then and the demand is not so high as I anticipated. So there goes the financing, right?
So see, there are two things in this one. So one is the composition of the auto index. So there are certain weightages that have been given within the auto sector. कि मारुति को ज़्यादा दे दिया, टाटा मोटर्स को कम दे दिया. And then Tata Motors का जो हुआ था, there was EV boom in there. So there was different factor playing in. So if you look at oil per se, when your oil is rising, your EV sector, if you look at it, कि EV सोचेंगे कि EV ले लेते हैं. So that is when your Tata Motors went up. तो वो कंपोजिशन के हिसाब से ऑटो इंडेक्स का ये हुआ है. That is what I would.
No, it's not an EV problem. See, anyway, the EV thing बैटरी का ही बना है ना, तो वो तो माइन करना पड़ेगा, माइनिंग कॉस्ट ऊपर जाएगा ना. So it's the same backbone. So you cannot escape.
The auto index went up in 2018, and it came down heavily in 2020 when the crude was at the minimum. So it has got no correlation as such with the crude price. If I may say so.
It's let me correct. It's not exactly crude oil. It is anticipation of interest rates, which dial down to the rate of energy.
Anticipation is another. I don't know, but the auto index went up in 2018. That was the high, if you see the charts, and in 2020 it was the minimum when the crude was negative. The futures, of course.
Yes. What was the high of November 2018 crude oil price?
I agree.
Actually, when you have a liquidation, right? It's something similar to that. So I was just trying to pitch in, saying that these things work on cycles, but sometimes the rogue cycle comes in. So it's the similar thing which is actually visible right now. But that's how it is. I just want to give an input.
Let me just collect some data.
Okay, thanks.
On the job hiring, and just put it the correlation of auto sales. I'll do it tomorrow and I'll put it out, and you can check it for yourself. I do think that the job market strength has something to do with the demand of these things. I think it'll be a barrier rather than oil prices, basically.
Yeah, thanks. Third side, Sharad bhai, you want to say something? Okay, Fact Finder, you raised a hand. You wanted to say something?
No, I just sorry, I joined a little late, but I briefly heard what people are saying. It's about whether there's a correlation between the auto sector and crude oil and various other aspects. India is generally a very funny story. It's the sector performance is not actually driven by crude oil and interest rates. It's more driven by the product introductions. But unfortunately, what has happened in the last 5-6 years is several disruptions that have happened on the demand side, supply side, and cost side, which has resulted in the entire auto sector getting hurt, which is one of the reasons why in the last 4 years, the auto index actually underperformed the Nifty. So the recent outperformance of the auto index is primarily just a little mean reversion of the massive underperformance over the last 4 to 5 years. And when I talk about this, and if you look at India in specific, India has a very low penetration, except for two-wheelers. I mean, we're still much lower than Vietnam, but in four-wheelers and CVs, we are still fairly low in terms of penetration. And so to that extent, India is generally a story where you have some bit of cyclicality, but generally it is growing. Unfortunately, last 5 years has been very different. So I don't think there's any correlation between interest rates and crude oil prices and autos.
Okay.
Yeah, I just wanted to add my 2 cents here. Any sector or stocks that are trying to give good breakouts towards the last week of the month, I'm generally very skeptical. It's often a move to trap option buyers. You'll see a lot of folks buying 8,000 CE for Maruti and all for June series, and once the next month starts, all these stocks start tumbling down. So just be careful with these breakouts towards the end of the month.
Sainik sir, on
Yes,
a
sir.
serious note,
Yeah. Tell me, sir. Listening.
ITC.
Yes, sir.
What is the best case scenario, price-wise?
Sir, I was always looking at what is the worst case scenario, and I started buying.
Sir, for once answer me no. Please.
No, I'll answer. No, I'll answer.
Yeah.
So first I thought like that and bought. Now I looked at the FMCG valuations. Of course, people will say ITC is not a FMCG company. So I am thinking it's an FMCG company because it's the second largest in terms of sales. Cigarette is anyway their money spinner. So I just thought, okay, it is now trading at 19-20 kind of valuation. And it has been sleeping for 9 years. So my way of looking at script is very different from what others may be doing. But I need confidence that first it will not go down significantly. Second is I am looking at the history. I looked at history of say Lever, what happened. So I thought people are generally not touching the script. It is trading at a throwaway valuation in a roaring bull market. So let us assume that the big guys get sold off because you see they're what we call the BAP stocks. Incidentally, the person who coined that word BAP is third side incidentally. So if somebody has to be given credit, it has to be given him. So I just thought, why can't ITC also get FMCG valuations? Say it is at 19-20. So if it gets 50-60, then it used to get 50-60 at one time. In 2013, I think the valuations were 55. So if you look at it like that, then at least you'll get 3 times from here. So I thought maybe you'll get at least 450 or somewhere 450 to 600. And then I thought, okay, if there is a deal done by India by the government with BAT, I expected that actually before
it won't happen. It
no,
won't
yeah,
happen.
yeah. No, that's right. No, I just because
It won't happen.
It has not happened actually. What I had thought was that the kicker, that was the kicker. It was not, I didn't buy for that anyway. Nobody knows what the government will do because government, especially the ESG problem, I thought LIC IPO may have a problem. So what they could do is 30% is held by the government. That is 8% in SUTI, and I think 14 with LIC, and another 6-7 across the other 2 insurance companies. So if you do a back-to-back deal with BAT and tell them that, okay, a control premium you want, we will, let's say, ask for a price which will double the price, for instance. So I thought that way you may get a better deal if that can happen. Now that has not happened. It's over. I can't think of government now planning to do that. I also thought if they wanted to...
with that thing,
sorry?
What is your price target?
Yeah, 450 is what I said, no? 3 times.
Yeah.
So 450 to 600, somewhere like that in the next 3 years. Next 3 years.
So whatever you are holding.
Yeah. Yes, Sharat Bhai. I am having severe problem with this connectivity. I've been thrown out 4 times. So I've hardly heard the speakers. Yeah, but I'll still try to answer whatever best I can do. Can you hear me? Abhishek, can you hear me?
Yes.
I can hear.
Yes, sir.
Yes, sir. We can hear you.
Yeah, Sharad bhai.
Yes.
Yeah, sir. Yeah, sorry. Yeah, Sharad bhai.
Holding fine. Hello.
Yeah, Sharad bhai, I'm not able to hear you properly. Yes, sorry, you'll have to repeat. I'm
नहीं
listening.
50% मेरे को दे दो आप. 50% is mine.
50% of what is yours?
Of your holding.
Okay.
I'll share the profit.
What is the deal? If I simply give 50%, what is the deal?
No deal is mine. It was a joke.
Sir, this is family money. Daughters have given. They have trusted their dad knows a little bit about stock market. And I've told them you buy only two things. And I bought most of it ITC, something Yes Bank, just for fun and games. I looked at the downside. My daughter keeps telling me that this is my retirement money. So I said, okay, by time retirement, you'll get good CAGR greater than the Nifty. So they're happy with that. So this is what I think ITC will have a CAGR better than Nifty in the next 3 years. So I am confident about that. I'm not confident.
One thing what drew my attention that Altria and Philip Morris in US are going up a lot.
Yeah, I noticed that. In fact, they are probably the best investments. Nobody touches them. But if you really look at over 30, 40 years, both Philip Morris and Altria, whatever that, so they I think have given much bigger return than S&P over a 50-year period or something. But then India
but recently they are going up. So I thought of buying ITC.
Right, sir. Let's. I mean, you are a better. You have better understanding of the market than I do. No, that is a fact. No, there is no. You are much more experienced. You have much more, let's say, in-depth knowledge of the industry. You stay in ITC hotels. Last time you complained that the ITC hotel was not good enough or something. I remember in Calcutta you stayed and you had a complaint. So I have never stayed in ITC hotel for maybe 10 years, sir. So, or maybe 5 years at least. I have not gone to an ITC hotel.
The short thing is, ITC is a good bet. You can easily double your money in, say, 1 year's time.
1 year?
Yeah. Whatever happens will happen very fast.
Okay.
And that's why I say the bear market also will happen very fast. Now, ITC going up and Nifty going down has no correlation.
Correct. In 2008, it happened with lever. That's what I'm saying. So I thought this will be the lever of 2022. I was very bearish on the market. I thought what stock to buy? ITC, because lever I saw in 2008. It fell.
And another I spot is Hindustan Lever. As Shishir said, this palm oil import ban and all gone. So it might run up 4-5%. And thereafter it will become steady.
Yeah, I think Third Side had done some research on that. I think he said it's near the 200-week moving average or something, right? Third Side? You had put it in your tweet. He had done that. So he says very rarely it comes below that. And it did come below that, but now I think it has gone above that. So maybe that's also...
So these 2-3 pillars will keep the markets okay. And for us, it's good. The top quality stocks are up and all rubbish down.
Yeah. I still believe that, whatever happens to the index, I think the small cap has got much more down to go. Like in 2018, it happened, you see. 2018, the Nifty did not fall between January and September, but the small cap continued to fall after the budget. So we can have a dichotomy in the market where the small cap keeps falling and the large cap is steady, or it may have a small steady upward.
Large cap also, Titan,
Yeah,
Pidilite, and such stocks will be decimated.
that is
Asian
sure,
Paint.
sir. That
Asian
Sharad,
Paint.
yeah.
At least 5 people are entering paint industry.
Yeah, not,
JSW and all that.
yeah, not only that,
So
Sharad
there will
Bhai.
be competition, heavy competition.
No, Sharad Bhai, the problem is it is concentrated among a few people. You know what there's one guy who comes on TV. I don't want to name. He talks of that BAP theory. That is, he goes for those stocks like Pidilite.
Sir, in my lifetime, ऐसा मैंने 500 बाप लोग देखे थे.
हाँ, वही मैं बोल रहा हूँ ना. That BAP will be decimated.
एक महीने के बाद में वो कोई बेच देगा तो बाप चला जाएगा.
नहीं, मैं क्या बोल रहा हूँ कि every bull cycle you will have some Pied Pipers. So these Pied Pipers, I would say, they are bidding up a stock like Titan or a Pidilite or likes of that, an Asian Paints or Nestle. See, once their redemption starts, there is no liquidity in those stocks, really speaking. When you want to sell, there will be nobody on the other side. So long as things are okay, they are okay. But the moment redemption comes, which I expect will come by the end of this year, I suspect it will come. Then you see there will be a problem in those stocks.
My question here is to Vijay and Sharad ji.
Next week.
Is there a safety in low PE?
What?
No, it is not safety in low PE, sir. We are not talking of low PE. We are only talking of good stocks. See, good stocks, if they also have low PE like ITC, it is worthwhile investing. Not every low PE stock is worth investing. Just because low PE doesn't mean anything. Contrarily, high PE doesn't mean it is bad stock. But there are certain stocks which, I mean, I can't explain. I'm sure Sharad Bhai also will have the same thing. You know that they are not worth that price. They are being held by a certain set of group of people. Those stocks are likely to be trouble. That's the only limited point I would like to say.
Yeah, thanks. Valuations are absurd in many stocks.
Yeah, but like say Adani group of stocks valuations are absurd, but you can't go and short them because liquidity is not there in that. 74% is held by the family. So you're trying to go and short that kind of a stock, you'll invariably get into trouble. But a time may come when they may have to pledge their stocks for if they keep on buying half of India, so they have to get funds. So they may have to pledge, and then the problem may start. We don't know that right now. Chal raha hai. So we have to just observe from far, and if you want to participate on the long side in those stocks. There's no point in trying to fight a trend. Adani trend you fight, you may not. You may get hurt if you try to short those kind of stocks. And they're all only two of them are in the F&O, I suppose. So it's really not worth. Anyway, Fact Finder, you wanted to say something? I think we'll close it now. I was thinking at 11:30 we'll close. But anyway, I would like to hear your point of view.
No, since you mentioned Adani, it's interesting that they don't have much, stock shares that are pledged. It's possible that from the holding promoters, so it doesn't reflect. That's one thing. Second is that the group in the last 8 years has not one single year with operating positive. I'm talking about as a group. So they're funded by banks. You don't need to ask how they fund it and who tells them to fund it, but they're funded.
Yeah, got it. We know, but we would not like to talk about it. Just let go. There are so many stocks which we can participate at, both on long and short. It's not that, we have to chase only Adani Group or XYZ Group. Invariably, when you chase groups like that, you'll get hurt for a very long time. Finally, they may come down, but by then you'll be dead.
I just want to correct. Fact Finder actually said that the pension funds think that 3% interest rates in US is lucrative. It's actually not. Europe has actually blown up its bond market in 2014 itself. So To break even, they need at least 7%, and the debt market is 10 times more than the stock market. So that's the reason many stocks are selling off in US is because of the debt market. See, stock market can go up and down, but once you have a debt market problem, then it'll actually accelerate, and that was what is happening every 3 years. There is a problem. So there is a balance of payment problem for big guys. So it actually echoes into the market through the credit markets. So it is managed, but when you don't know what the dam will break. So this is a real condition for. It's not 3%; it's actually 7%. So I just want to give that info.
No, I just want to talk about the report. What I was referring to was a report published by Bank of America called the Fund Manager Report, which comes every month, and that talked about allocation of money. And you're probably right; it is slightly different in Europe versus the US. I can't be sure. I haven't looked at the entire pension fund industry, so I will say that maybe you're right. But as far as I was making a reference to the report that was published by Bank of America, which is monthly survey that they do with about 300, 400 fund managers globally, which includes a lot of pension funds, where they mentioned that allocation away from equity will move to debt once the US 10-year is 3%. I was referring to that.
Yeah, but the problem is that only these reports are there to actually pitch for the case for a debt market because the US is actually having a balance of payment problems. It's running from 2018, and before this COVID thing, which is not really true. September 2019, they were actually having something called the repo crisis, and the follow-up was the events. But it has been continuing from 2018 because the recirculation of US treasuries is not happening. And it could be a biased information, but as far as I know, what's happening in the last 4 years, it's because of higher interest rates, which is causing a ripple effect because the bond market is kind of the security which is used for trade all around the world. It's not the cash. You can actually refer to SNL crisis in 1991. What was the problem? It's much larger right now. I'll just give you some figures. Something like the total euro dollar or dollar market in 1980s was around $80 billion outside the US. The euro dollar is nothing but it's not euro USD, but it's the dollars floating outside the US banking system. In the year 2001, it's around $304 billion. Now it's more than $14 trillion. So it's not that the fear of what's happening, it's not 3%. So artificially suppressing the rates, it causes a lot of collateral damage. In the sense, post 1971, the collateral was the US treasuries. And you can people can refer something called the Triffin's dilemma and Gibson's paradox. These are some papers where you can actually see what is the problem, how the system functions. And 3% is too low. If it goes to something like 4%, 4.5% to 7%, there will be a liquidation effect. And this is what caused NASDAQ bubble to pop in year 2000 and even in 2008. And 2018 itself, there was a problem. So you can refer this. Probably you'll find some answers. Thanks.
Sir, can you repeat? Can you repeat, sir?
Top trader, you obviously are extremely well aware of what happened to global macro. Might I suggest once that you actually host a session and discuss it? It's very interesting. Thanks.
Yeah, Fact Finder, I have been trying to pursue Top Trader to ask a question itself. I have to persuade him. Okay, he's like you only. Okay, both of you don't reveal your names, but you are sitting
Sir, I revealed my name, sir.
No, no. Hold on. You revealed my name. Even Top Trader, Fact Finder also revealed his name. Okay, both of you I know, but you are very, very secretive people. So you don't. So I'll be very happy to attend your spaces. One is sitting in Bangalore, one is sitting in Singapore.
Sir, I can't create my spaces. I learned my spaces through you, so you can create it.
Okay, fine.
You can host it. Maybe I'll talk.
Yes. Both of you please come regularly because both of you have very in-depth knowledge of, let's say, global macros, which people like me lack. We go from. We read from somewhere and get it. Of course, both of you have been giving me a lot of information outside the spaces,
on a